Okay, sir.
Very good afternoon. I'm sorry for 1 hour late. So we will. I hope that you all can see the screen. Time value of money. We discussed.
No, sir.
We discussed the last week the meaning of time value of money, and today we are going to discuss the rest part of the handout. First of all, we will try to complete this slide presentation. Then we'll come back to the question. I think you all can remember we discussed basically 6 types of cash flow. One is calculating future value of lump sum. Other one is calculating present value of a lump sum. Next 2 is really annuity. We discussed the annuity due and annuity general. Annuity due means the beginning of the period. Annuity ordinary means end of the period. Annuity means a fixed amount of money you received or make a payment for a specified period. Suppose you take a loan for 1 year, you are making payments of 1,000 rupees per month. So thereby your 1,000 rupees series of payment over this 1 year period can be considered as an annuity. So when you are making this payment, we ask fundamental question whether you are making the payment 1,000 rupees at the beginning of the month or end of the month. If you are telling that, okay, I'm making the payment at the end of each month, then of course it is, we call it annuity ordinary. Or if you are saying that, no, I'm making the payment each month beginning for 12 months or over the 1 year. So then of course it would be considered as annuity due. I think you got it. What is the meaning of annuity due and annuity ordinary and annuity, the meaning of an annuity. So you can talk about present value and future value of an annuity. So when you say annuity, there is a series of payment. You can talk about the present value of annuity and the future value of annuity. And also you can discuss the annuity present value due and annuity present value ordinary, annuity future value and for ordinary and annuity due. So thereby altogether there are 6 ways of calculating annuity. We discuss all these matters in last week, and I asked you to develop 4 tables. I hope that you are having those 4 tables with you. In addition to that, I can remember we discussed the 72 rules also. How will it take? How long will it take? Or how long does it take to double your 5,000 at a compound rate? So we had a simple formula. What we did was a rule of 72, just 72 divided by the relevant interest factor. In this case, of course, you can remember 72 divided by 12. It was almost 6 years in our case. Then, of course, we discuss valuation table, 4 tables. So what I will do is today, I will just discuss the rest part of the other type of cash flows with you and try to complete the presentation or the sessions first. Then we will discuss few questions with you and how to solve those questions. Right. Then we discuss all these things, and also you can remember when there is a time value money related issue, we need to understand it thoroughly. We have to have a timeline. Timeline means something like this. This is timeline. So you are putting the cash flow in the timeline. Year 1, year 2. This means that first year end and second year end, you are getting so much. And third first year beginning, that is 0 year 1,000 rupees. That's the timeline. So put cash flows and arrows on timeline, determine if it is a PV or FE, whether it is a present value problem or future value problem, and determine if solution involves a single cash flow, annuity stream of cash flow, mixed cash flow, and solve the problem. So you have to decide whether the scenario is whether to calculate present value or future value. And also the type of cash flow. I think you can remember we discussed single cash flow and also annuity streams. That means annuity type of cash flow. And now what we are going to do is we are going to discuss the mixed flow. Whatever the pattern of cash flow need to be identified before calculating your answer, right? So we'll come back. Today's new point, the mixed flow of cash flow. So far I have calculated with lump sum and annuity due, annuity general. So all these mixed flows of example I have discussed with you. Julia and Miller will receive the set of cash flows below. What is the present value at a discount rate of 10%? Now, here the cash flows are given. First year end you are getting 6,600. Second year 600. Fourth year 400, and next year 400, and next year 100. So you will see the cash flows are not equal over these 5 years. First 2 years 600, second 2 years 400, and last year 100. So thereby it's called mixed flow of example, mixed flows, unequal cash flows. You see, cash flows are not equal. So we are asked to calculate the present value. Present value means value at 0. So we have to calculate the present value means value at 0. Okay, so how to solve this question is, since there is no pattern, we can't consider this as an annuity. We can't consider this as annuity, right? So thereby what we have to do is we will consider this as a separate case, this as a separate case, and this as a separate case, this as a separate case, and also the 5th year cash flow also as a separate. So thereby we consider there are 5 lump sum cases, 5 lump sum cases, single payment. So what we do is basically we calculate the present value of each cash flow like this. So we take the 600 rupees you are receiving at the end of the first year, so much. We are receiving the 600 rupees at the end of the second year, the present value is so much. Third year cash flow, present value is so much. Fourth year cash flow is so much, and 5th year cash flow is so much. But you have to remember the interest rate is 10%. So we are calculating the present value under 10% interest rate. So meaning is that if you are receiving 600 rupees at the end of the first year, if the interest rate is 10%, today's value of 600, what we are going to receive at the end of the first year would be 545.45 cents. Like similarly, if you are receiving 600 rupees at the end of the second year, today that 600 rupees you are receiving at the end of the second year is worth 495 rupees at the rate of 10%. Likewise, 3-year future cash flows, present value is so much. 4th year cash flow is present value is so much. The last year, the 5th year, if you are receiving 100 rupees in the 5th year, today's that 100 rupees is worth 62.09. I think you got the point. So when you look at all these, if you consider this as a series of payment, if you consider it as a series of payment, the present value would be the sum, the total of all these present values. So thereby, 1677 is the present value of those series of cash payments. Suppose you are going to buy a particular piece of land or whatever. If you predict that your cash flows are so much, suppose you are going to buy a share or particular number of shares, so you predict the future dividends, future cash flows. So you see that first year by investing in shares you get 600, second year by investing in shares you get 600, 400, 400, 400, and what we can say is that series of receipt is worth today is 1677. That is the idea. So your future series of cash flows worth so much, that is your valuation. As I told you last week also, this is your valuation. You can go to the market and see what the price is. If the price is higher than this, I don't think that you should buy it. If the price is below this 1600, 1677, better to buy whatever, the better to make the investment. So that is the idea of the cash flow. So I think you understood that the cash flow in this example. Here, of course, yes, the other way is, I don't think this is, these two figures are similar, so they have in this same answer you are getting, but they consider these two as same but different factor. I'm not asking you to do that way. We will omit that way. The factor is a little bit different. You see, here you are taking present value, interest factor, annuity. That means 2-year factors you are taking. Annuity 1.76. Here you are taking another 2 years factor. So that is 5.7. Likewise, so there are different way of calculation. Same answer you can get, but I just want you to think about this way. Anyway, that's how you got that answer. Okay. So that is about mixed type of cash flow. Then frequency of compounding. Frequency of compounding means, example, in certain cases, certain banks may, tell that, okay, our interest rate is 12%, but we are calculating interest monthly. Another bank might come and say that, okay, our interest rate also, annual rate is 12%, but we are calculating interest quarterly. Another bank might say, okay, no, we are calculating the interest, weekly. Another bank might say, no, we are also same interest rate, annual rate is same, but we calculate the interest daily. So that is the frequency of compounding. Now, if you are looking at the frequency of compounding, you may talk about a particular interest rate which is called effective interest rate. Effective interest rate. We call it effective interest rate. How we are going to calculate the effective interest rate is here this effective interest rate, annual interest rate, the actual rate of interest earned after adjusting the nominal rate for factors such as number of compounding periods per year. This is how you calculate the effective interest rate. 1 plus I means the interest, M means the, how many times you are compounding. Again, M is how many times you are compounding per year minus 1. But before that, before coming to this slides, I just want to tackle this issue also with you. Just think about frequency of cash flow under this example. We had a question of formula, yes. For example, impact of frequency, Miller has 1,000 rupees to invest for 2 years at an annual interest rate of 12%. So you have annual interest rate of 12%, but you see compounding, we say that you can here in this example what we have done is we have assumed that different compounding, different frequency. For example, different example. For example, 1,000 rupees. You see here 12% divided by 1. That means we assume that you calculate interest annually. So thereby annual interest rate 1,000 rupees 1.12 into power 1. This 2 means because it takes 2 years. So thereby you get interest, first year interest and the second year interest. That's why we put 2. So thereby answer is 1,254. Now if you look at the second scenario means your interest rate is 12% per annum. That is true. But compounding, number of compounding, the method of compounding is semi. That means 2 times you get the interest. So thereby annual interest we divide it by 2. Why we are dividing it by 2? That is the M here, because we get 2 times semi-annual. So thereby 6-month interest we get here. When you divide the 12% by 2, you get the 6-month interest. And obviously, even though you are getting it 2 times interest for 2 years, the blue one says the 2 years. So thereby power 4 is coming into this case in semi-annual. So thereby you see that your total value of the investment would be 1,262. Is it clear? Then fourth one, if you calculate the quarterly interest, that is compounding quarterly, even though interest rate is 12% you declare, then per year you get 4 times. Frequency is 4 times. So what you do is you divide it by 4. You get the quarterly interest. When you divide by 12%, 4, you get the 3%. So 3% is the quarterly interest. But remember, you get 4 times interest per year and you are going to keep the investment 2 years. So thereby 8 times, power 8, you get 8 times interest. So thereby your answer is this much. And if you calculate the monthly, of course, if you calculate the monthly, your answer is this. See here? Monthly, you divide it by 12, you get the 1% interest per month. So thereby, for 2 years, 24 times. 2 years, 24 times. And similarly, if you are getting the interest, this is the story. You divide 12 by 365, assuming that there are 365 days per year, and multiply it by 2 because you keep the investment 2 times. So your investment value would be 1,271. So that is the frequency. So what we are going to tell you is that higher the number of frequency, higher the future value. So thereby, if 5 or 6 banks offers annual interest rate, annual compounding, semi-compounding, quarterly compounding, monthly compounding, daily compounding, there are 6 alternatives for you to invest your money. So if there are this 5 investment opportunities, where do you go? We go where compounding is the highest, where the frequency is high. Daily compounding is the best option. So we will invest here, even though interest rate is common for all the alternatives, all the banks, but frequency is important. So thereby, when you have the frequency, what you do is we just divide, get the particular period interest and apply for the period of compounding. I think that is very clear. That is the financial calculator which I omitted again. Then I just want to discuss a few points with you. Effective annual interest rate. Effective annual interest rate, the actual rate of interest earned after adjusting the nominal rate for factors such as the number of compounding periods per year. How do you calculate the effective interest rate? Is 1 plus 7. We have earlier studied 6 formulas. Now 7th one I am introducing. What is 7th one? 1 plus I. I means the interest rate per annum, divide by M and power M minus 1. So you can calculate the effective interest rate if if say Basket Wonders has 1,000 rupees CD at a bank, interest rate is compounded quarterly for a year. What is the effective annual interest rate? ER. ER means effective annual rate. Even though interest rate here is 6%, that is the declared interest rate. That is the common interest rate. But what you get actually is totally different from what is declared if compounding period is, frequency. Frequency is high. That's called ER. How do you calculate EAR? 1 plus, you divide the 6% by 4. Why you are dividing it by 4? Because you get quarterly interest. And so this bracket, power 4, why you are power 4? You get per year 4 times minus 1, then you get the interest. So effective interest rate is 6.14. That means that's why we are going for, in earlier case there were 5 alternatives. We went for the daily compounding banks because their effective rate is highest or the higher than the other 4 alternatives. So likewise, what I want to communicate to you is that compounding rates, the annual rates, and when you compound, when there are frequency per number of times you calculate interest per year, so effective annual rate is higher. Is it clear? Okay. Then Julia borrows 1,000 rupees at a compound annual interest rate, 12% amortize the loan if annual payment are made for 5 years. Now, same thing we discuss. Now, here what we do is we think about calculating installment. We are thinking about calculating installment. Now, suppose customer coming to you and asking, I need 10,000 worth of loan, or 1 million loan, or 12 million, 40 million. I'm ready to pay the loan, 5 years. Okay, the interest rate is 12%. Then you have to tell the customer what the installment would be. What the installment would be. That's called amortizing a loan example. That's the meaning of amortization. So there we are calculating the installment. I know practically you might have a small window in your computer, or you might have a particular software or the application. You just enter the data, customer requirement, how much to finance, the loan amount. You enter the date, period. The customer might say, okay, 5 years, 10 years. Then you enter the 10 years or 240 months, whatever, depending on the payment pattern. Then you enter the interest rate. Then you get the rate. Rate means the installment. You say the customer, okay, this would be the installment for you. Then customer will ask, okay, no miss, I would like to make the payment in not 5 years, 10 years. So then you will, because customer needs to needs a lower installment. So then you just put the year change number of years you change and you say, oh no, miss, now it is so much. No, customer might say, no, it's you want to take finish it 2 years, then you enter the 2 years, then you might tell this time the installment it's little bit higher because you are trying to make the payment, you are trying to settle the loan very quickly. That's why your installment is high. Likewise, you can calculate the installment. What we are here discussing, how theoretically, in your computer you can do it, but how theoretically, how we are calculating it, loan amortization or the loan installment. Suppose you are borrowing 10,000 in this example. You are borrowing 10,000, compounding annual. So thereby compounding annual means only one time you get the interest or you have to pay the interest. Annual compounding, 12%. So thereby there is no problem in the effective interest rate. Because why? Compounding annually, annual means one time only. So what you do is basically you can remember the formula what we discussed under present value. So present value of 0, R is the R is the annuity here, or the payment. Here you see present value interest factor annuity. You are looking at the table number 4 what I discussed. Now you may have the table now. Present value interest factor annuity, IN. Here in this case, I is 12%, period is 5%. So what you do is you select the 12% column and read the 5 row, and the cell where you meet that cell, that is called present value interest factor. This is the present value interest factor as per your table. Now what we do is 10,000, you want to calculate the R, you take the R out, you divide it by particular factor. So you get the relevant installment. So thereby installment would be 2,774. That is the loan amortization schedule. Then we have to discuss the loan loan amortization schedule. Loan amortization schedule is, of course, you may have your own in your computer. Customer might ask, can you give me my loan account? So this is the individual customer loan account. Okay, ending balance so much, 1,000. So you are making the payment interest. Payment is so much, interest is so much. So payment minus interest would get the principal. This is the principal. So you have 10,000 borrowed. From 10,000, if you deduct this, your closing balance at the first year would be 8,420. If you are making the installment as you promised, first year balance would be 8,426. Then second year onwards, again you are making a payment of so much. Interest would be 1,011. So the capital component would be this minus the interest, of course, this much capital. Then from 8,426, you minus the 1,763, your capital balance or the loan amount would be likewise so much. So likewise, when you make the 5 years payment, year 1 payment, year 2 payment, year 3 payment, year 4 payment, and year 5 payment, your loan balance would be 0. That is the idea. So this is the total payment you are making over 5 years. This is the total interest you are going to pay for the bank just because of your borrowing. This is how you settle the 10,000. Now this is called compounding method, annuity method. Under annuity method, what happens is you are charging customer initially high rate, high amount of interest, but later on you are charging low interest. Simultaneously, you are recovering low capital in the first year, first period, but latter part of the loan scheme, you are recovering more amount of the capital you are given to the customer. That is the characteristic of annuity method. But remember, whatever the method you adopt to recover your interest and principal, your installment would be remain constant here. Over the 5 years, installment would be, so much. So you will label this as what? Annuity due or annuity general. Now this 2,774, which is you are receiving and which is paid by the customer. You are receiving, customer is paid. So from the customer's point of view, it's a payment. From the bankers or the lender's perspective, it is a receipt. So thereby, this is an annuity, but annuity general. Why it is annuity general? Because you are getting it at the end of the month. That is the case. So if I ask you to calculate the present value of this series of payment, the loan installment, what would be the present value under the interest rate of 12%? Suppose interest rate is 12%. If the interest rate is 12%, what happens is, if you discount this, if you calculate the present value, of course your loan value would be the present value. So thereby you will understand the annuity and the present value are interconnected. That's why in this formula, we wrote the formula last week. We discussed the formula present value. Instead of R, we put here, you can remember A, annuity, but here in the slides they have put the R and multiplied by present value interest factor annuity table, not the interest factor table. Second table is present value interest factor. The fourth table is present value interest factor annuity. I hope that you got it very clear. Then that is the financial calculator. So with that, I think our story is over. Discussion, right? So again, if I really go back to the total presentation, what we did was we discussed time value of money concept. Time value of money concept. There, of course, we discuss meaning of time value. We told that there are 3 reasons for time value of money. You can remember: consumption, investment, and uncertainty. All these 3 things we measured in terms of interest. Thereby, time value of money, another name for time value of money is interest, or the compounding by interest. Then we talk about the present value of lump sum, a single amount, and also future value of single amount. So thereby we calculate the present value of annuity and present value of interest, present value of these things. So all the things we focus on by using formulas, tables, but except if the cash flows are really unequal, we call mixed. If the cash flows are mixed type, then you have to consider case by case. So we did a mixed type of cash flow also. We did a mixed type of cash flow also. Okay. So with that, shall we just go to the time value question? Then we can understand what those we are just doing the practicing questions, but there are 12 questions. We will try to answer the all these 12 and plus the practice questions. Are there any questions? Okay, if you have any question, will you just put it to the chat box? Yeah, chat box. Do you have anything? Can't see the presentation. We can't hear you. Is it? Hello? Can you hear me?
Yeah.
All right.
Yes, sir. Yes,
Yes,
sir.
You can see the screen or presentation also, no?
Yeah.
I think earlier.
Also.
Okay, good. Shall we just look at the first question? Just to what we are doing now is we are trying to recapturing what we discuss and also apply what we discuss, and also in this when we discuss these questions, certain extraordinary matters also will come in. So I will discuss those matters then and there with you. But basically we have discussed three types of cash flow: lump sum, annuity, mixed. That's the base, three. But we calculate the present value and the future value. Then of course you get two scenarios, each cash flow pattern. In addition to that, we calculate the effective interest rate or effective annual rate. That means effective annual rate means where you get more compounding, or the frequency of compounding per year for a particular period when interest is declared commonly for 1 year. Right. I think time value of money is not a problem. You know time value of money. If you write the time value of money is expressed in terms of interest, answer is correct. You can say time value of money, but when you describe in this way, you have to talk about the equal amount of money. When I get 100 rupees today, and when I get when I have an alternative to get another 100 rupees, either 100 rupees today or tomorrow, my preference is for today's 100 rupees. That is called time value of money. Remember, equal amount of money we are talking when defined that way. Or you can say time value of money is, measuring the opportunity cost. I will not talk about the opportunity cost here, but there are different ways of expressing the meaning of time value of money. When we discuss cost of capital and other topics, you will understand the time value of money little bit, advanced way. But here in this session, what we did was we covered the time value of money in a simple way. We call it interest. Is it clear? And annuity is, of course, a fixed amount. I would say series of amount, series of payment or receipt, which is in terms of fixed for a fixed period. Classic example is the loan schedule what we discussed lastly under amortization, 2,774. That is an annuity. So in the annuity case, you are getting or making a payment, fixed amount for a particular, fixed period in terms of fixed amount. Each year, 5,000 rupees for 5 years. That is an annuity. But fundamental question is whether the annuity is beginning or end, whether the annuity is at the beginning of the period or at the end of the month. For example, when you take a loan, if the loan installment is calculated based on annuity, but there are other way of calculating loan installment. I'm talking about the central bank guidance under the under the annuity method. So their loan amount equal amount is equal. You make your loan installment is equal, but you may have the reducing balance also. But we are not talking about the reducing balance here under annuity. Under reducing balance, you know that your installment is not fixed. Do you agree? Yes. Okay, annuity is very clear. Then assume you deposit 20,000 today in an account that pay 12 interest rate per annum compounded monthly. How much you have in 2 years? So thereby, so you have to calculate. Will you just get the answer? Can you refer to your table and get the answer? Is it possible? I hope you can see my Excel sheet also. Is it? Can you see my Excel? No, no. Hello?
Yes, sir.
Can you see my Excel sheet also?
Yes, sir. Yes,
Yes,
sir.
sir.
Yes, you can see.
All right, good. Okay. Now you see that you are depositing, you know, so much money at 20,000. Sorry, 20,000. 20,000 you are depositing. So you are keeping this investment how many years? 2 years. 2 years means since it's compounded, you know, monthly, you are keeping it for 24 months because 12 months, 12 months. So thereby, we are keeping this investment for a period of 1 to 24. That means you are get the 20,000, you are get the interest for 20,000 in the first year, and you are getting the interest for the 20,000 in the second year. Likewise, you get 4. So how do you calculate the future value? Can you remember? So what you have to do is you have to take the 20,000. Is it clear? Multiply it by 1 plus R. R means the interest. I think here the interest is not 12%. Here the interest is 1%. Why? You are calculating, you are getting the interest per month, compounded monthly. So thereby annual interest rate is 12%, that is true, but you are getting it, compounding it monthly. So thereby monthly interest rate is 0.01%. So I just put that. That's called the frequency. Frequency is 12 times. So thereby close the bracket and put the, you know, power. How much power? Since we are getting it 2 years, 24 months. So that's how you get the, we call this. So thereby at the end of the 24th month or the second year end, your account balance would be 25,394. Is it clear? So if you have your table, 12% column.
Excuse me, sir.
Oh,
Excel sheet
yeah.
is not clear here.
Not clear means you can't see it? Or small? You want me to make it larger?
So can you maximize it?
Yeah.
Right. I'll make it little larger. I know. I can understand. I hope that now the letters are a little bit larger. Okay?
Now that is okay, sir.
Now it's okay. Can you manage?
Yes, sir.
Yes. Yeah.
Right. Now suppose the interest rate is 12%. So you may have the, you know, table year 1, year 2. So your table may be with you up to 24. If your table is not up to 24, you can't find out the answer. You got my point? 24 කියන මේක තියෙන්න ඕන. Table එකේ දැන් හදපු එකේ. So the formula is, I think you can remember the formula. Here the formula is I'm sorry, even though 12%, we have to take 1% column, no? Because, yeah, 1% column, not the 12% column. 12% for 2 years, no? Here 1% for 24 months. Now, this multiplied by, the power 1 would be, I think, same. Then when you copy this, you get the rates. Okay. Is it clear? Okay. So this is the idea. If you make it decimal, so if you have developed your table, if you read the 1% column and 24, row, so your cell would be 1.27. Meaning is that you are investing this 20,000 today. Suppose you are investing 1 rupee today. If you invest 1 rupee today, that 1 rupee investment under compounding method, not simple interest, under compounding method, that 1 rupee will worth 1.27. That is the idea. Is it clear? Okay. 1.27 cents. Remember lump sum, we are talking about lump sum. So you have invest here, how much? You have invest here 20,000. Is it clear? You have invest in 20,000. So what we do is 20,000 multiplied by 1.27, not 2 point, 1.27, your answer would be same as what we calculate, 25,400, which is 25,000, rupiah hayak metana podi difference එකක් තියෙනවා, but don't take it as material, because here we consider 2 decimal. I think here if we make it 4 decimal, answer would be little bit more. Yeah, sorry. Okay. So that is the case. Are you clear? Were you able to find out this figure from your table or not? Or you didn't do it? This is the table method. If you at the examination, what we will do is we are providing the table. Then what we have to do is to get the answer. You have to find out the examination context, 1% column, 20% row. You find it, and likewise, you have to write this way: 20,000. 25,000 into, clear? I would say, if I'm writing in a correct way, we are writing future value interest factor. Can you remember this? Future value interest factor. Future value interest factor for 1%. 1% for how many period? 24 months. So that's how you write in a, I would say, in a standard way. In a standard way. I know it's coming here. Shall I put it here? So that is the standard way of writing. Then meaning is that you are looking at the future value interest table, factor table, 1% column, 24 row. So you get the answer. So next writing would be 20,000, right, multiplied by 1.27. So you next column, you are writing the answer as 25,039. This is the manual physical type of examination answer. But you can have the answer in other way also. Is it clear? But you have to have the tables. If you have to have the tables. Or if you don't have the table, this is this way. If you have the calculator, yes, you can do it. No problem. Even you have the calculator, you can, but you should have a scientific calculator. You should have a scientific calculator. Okay. Is there any question? Otherwise, shall we go to the next question? Was it difficult to develop the table? No. Right. Then shall I go to the next one? Right. Suppose you have just celebrated your 29th birthday. What is my 29th birthday? That means you have completed, I think, 29 years. Am I agree? Or starting of the 29th? What is my 29th birthday? Starting 29 or completed 29th?
Completed 29 years.
Exactly. You have already completed 29. If you are not interpreting this data, your answer will vary. 29 birthday means you have completed 29. Okay. Now you are starting, your beginning would be 30 years. 30 years first day or the 29th year end. You want to set up a trust fund for you that you will pay 200,000 when you turn 40 years. That means when you completed 40 years, you are expecting to accumulate a fund of 200,000 worth. ලක්ෂ දෙක fund එකක් හදාගන්න බලන්න. If the relevant discount rate is 6%, here the discount rate is a new word. It may be new word for you. Discount rate we will discuss in the next class, next chapter. Discount rates, here the meaning is interest, but there is a little different for the discount rate. The meaning is, we will discuss that in that class. But for the time being, you assume it is the interest rate. Per annum and compounded semi-annually. What do you mean semi-annually? You are getting the interest, the frequency is 2 times. So thereby not the 6% you are going to apply, you are going to apply 3%. And semi-annually, you divide it by 2. How much is this fund worth today? Are you clear? They are asking 29th birthday. And they are in the 29th birthday, that means the 30 and 40. So thereby how many years for this period?
11 years.
Exactly 11 years, not the 10 years. You have to remember. Because here we are focusing on 40th year. 40th means the end of the 40, not the beginning. If you talk about the beginning of 40, of course, it is 10 years. I think that interpretation, timing factor is much more important. I think I do agree. You have to take 11 years, right? Now you are very clear what I am trying to tell. If I am really taking another one. Can I take a new sheet? Yes. Now I make it little larger for you. the sheet. Okay, I hope that you all can see. Now the story is different. So how can you put the 30-year beginning? What is the symbol we are using? 30th beginning. Can I put 0? Agree? Because you are you have completed already 29 years. 30-year beginning means 0. Is it clear? 1 means what? 30th year end. Right? Likewise, how many years? You will have, 11 years. Agree? Not the 10, 11 years. If I am putting years, here 30th. How many other? 31. I'm just putting for you to understand this data. No need of putting 31, 32. Okay? Here it has to be 40. 30th means what? 30th year end. That is first year end. Likewise, 40th. When you say 40, you completed 40 years. That is 11 years. How much you are depositing? No, you need this much of money. Neither. Agree? අපට ඕන ලක්ෂ දෙකක් කවදාද 40 වෙනි බර්ත්ඩේ එකේදී. What is the question? Question එක තමයි අද කීයක් deposit කරන්න ඕනද? Are you clear what I am telling? Are you clear what I am telling? What is the value as at today? What is the but remember, this is the simple presentation, but according to this question, I think interest is calculated semi-annually, compounded semi-annually. What is the period? Of course, even though we took as year 1, year 2, year 2, there are 2. එතකොට ඇත්තටම මේක end වෙන්න ඕන කීයෙන්ද? 22 වලින්. Agree? එතන තව period දෙන්න ඕන. You got it? Here දෙකයි, here 2, here 2, here 2, likewise, because semi-annual no? So how do you calculate it? Can you remember the formula? Yes, I will remind you. Can you remember the first formula we learned? Future value. Sorry. We learned the first formula, future value equal. Can you remember? Present value. Can you remember? 1 plus. 1 plus. We took I really. I means interest. Our N. Agree? Our N. This is the common formula. Now, here, second formula what we learn is not this. We took the PV out, you can remember. Here, FV multiplied by, can you remember? 1 divided by 1 plus I. Can you remember this one? I'm sorry, 1 plus I, no? 1 plus I. There, of course, you have to put the power N. ඒක නිසා මෙතෙන්දී පොඩ්ඩක් ප්‍රවේශමෙන් bracket එකක් දාන්න වෙන මේ කොටසට නේද? Can you remember this formula? That is the second formula we learned. Right. So, which formula is applicable? Since it's a lump sum, second formula is applicable because we want to find out the present value. Present value. Is it clear? But under 3%, For how many years? 22. Here the not years, 6 months, no? අවුරුද්දක් කෑලි දෙකකට බෙදුවාම 6 month වගේම 22ක්. Year is now 20 to 11 years. That's true. Right. So how do you do? Very simple. You apply the data to the formula. How do you do formula? 20,000. Neither. 20,000, 200,000 multiplied. Okay. 1 square divide by, can you help me? 1 plus 0, 3. 1.03. Why? Because you have to take 6 month interest. Semi-annual. So we put the bracket because there is a little bit complex calculation. And we put here not 11 years. We put here how many years? 22 months, really 6 month wise, not years, I'm sorry. So that's the answer. So you should get the answer. So thereby, if you want, 200,000 in your 40th birthday, under the condition of 6% annual interest rate and compounding semi-annually, you have to deposit today 104,378. So මෙතන answer එක හැටියට අපිට කීයද දාන්න වෙන්නේ 103,478ක් deposit කරන්න ඕන. Assuming that over the 11 years your interest rate remain 6%. But if the interest rate is changing, we don't know. The answer would be, your estimate would be a little bit different. So thereby we assume that the interest rate for over 11 years remains 6%. But we took 3%. Why? You calculate the interest semi-annual. Is it clear? So that is about how you calculate, manually by entering into the data in your calculator and all that, or at the examination if you are using the table. So table method writing would be this present value. I'm just helping you. Present value equal, right? 200,000, okay, multiplied by, formula future, present value interest factor, remember 3%, not the 6%, 3% for how many years? How many years means how many time? 22 semi-annual. I don't know how to write it, but 22 period. 22 period, not the years, but 6 months. What you have to do? So you are looking at the present value interest factor table, which we discussed. Second table, 3% column, 22 period, 3%. So you might have a table. If in your table you will have a 3%, just see 3% you have. If it is not, you have to develop your table, right? 3%. You have year 1, year 2. Likewise, I think you have the year 1, year 2. Neither. So make it the අපිට ඕන 22 කරේ 11ක දෙකක් 22යි 22 වෙනකන් ඇද ගන්න වෙනවා. එතකොට මේක 22 දී අපි නේ මම නවත්තලා තියන්න පුළුවන්. එතන අපි ගාව එක එක රේට්ස් ඇති. එතන මේක ෆෝමියුලා එක එන්ටර් කරලා ඇත්තේ මෙහෙම ඔයගොල්ලෝ එක 1 divide by 103 10.03 3%. You get the power. හරි ලේසි මේක මෙතනින් copy කරගත්තාම you might know better than me. ඒතර factors ටික තියෙනවා. ඔන්න factors ටික. So what we have to do is we have to look at the 3% column and 22 row. 22 row is so much. So thereby your answer would be, how do you calculate the answer? 20,000, 200,000, multiplied by this particular rate, right? Your answer would be same. මතකනේ අපිට 104යි 378ක ගාන වගේ ගානක් ආවා. Yeah. එතන 378යි. මෙතන 400 මං හිතන්නේ අපේ ගාන 378යි. මෙතන 100ක වෙනසක් තියෙනවා. නෑ මං ලියලා තියෙන වැරදිනේ. මෙතන 103යි 300 නෑ 104යි 378. Okay? 104යි 378 ගාන අපි. Right? Is it clear? So you get same answer. That is how you calculate the future value. But for the examination, you have to remember, we will give you the standard table where you can find out the rates and multiply. Okay? Is it clear?
Yes, sir.
Okay. Now shall we go to the next one? Next question. Of course, now if you want to do in this, whatever the case in Excel sheet, if you want to check your answer whether the answer is correct, you have one option. In the Excel, you go to the formula column. How do you do it? Excel formula column. In the formula, you go to the financial data or the financial icon. So there, of course, you get many different mathematical calculations, formulas. If you want to calculate the future value, this is that. Here it's different. Because it is very simple. There is no particular formula in the here. I don't think you can apply data to that formula because lump sum formula it's not here. So we will apply the other two formulas here. I'm sorry. Okay. Anyway, how do you calculate lump sum? Very clear. I have given you very clear idea about how to calculate lump sum, future value, and present value. Future value, present value. Very importantly, if you talk about here, your table is this component only. Remember, that is your table. Here also, same thing. This is the component in your table. Make a table eකට අපි insert කරගන්න. ඔය formula එක. Okay, shall we go to the next one then? Now you see the first question and second question talks about lump sum, a single amount. Here, suppose you deposit 20,000 each month for 2 years. Now the story is different. Now what is the story? Story is each month you are depositing 2 years, calculate the present value or the future value if interest rate is 12% and compounded monthly. Okay. So what is the first question you have to raise here? What is the type of cash flow?
Annuity.
I think annuity. Annuity, there are two types of annuity. Annuity due or general? Annuity?
General.
General.
How do you know? How do you know? But here I think it is your assumption. Here, each month for 2 years. We don't know each month end or beginning. That is what we have to be very careful. You can do this question either in terms of end or beginning. Meaning that you can consider this 20,000 annuity due or annuity general since the question is not specifying the timing. Therefore, you can make an assumption or you can do in both ways. If you do in both ways, there are 4 answers. Right? You have to calculate the present value and you have to calculate the future value. So I think question is very clear. 20,000 each month for 2 years and 12% interest. So since it's a monthly compounding, here compounding monthly, so we take the 1% interest, not the 12% interest. Is it clear? 2 years, Nisa, metana අපි ගන්නවා කාලය කොච්චරද? 24 periods. Okay? Having understood that, shall we do it in a different way? I will make it larger for you. I just put the first scenario. Okay. Shall I put it here 0, 1, okay, for 24 months, right? If I am assuming that this cash flows is annuity general, first deposits, is it 20,000? 20,000. First 20,000 is first month end. Likewise, each month end, for 24 months, you are making these deposits. That is the idea. Are you clear? So you will get 24 deposits. So the question is asking us to calculate future value, I'm sorry, present value, value at here, right? Value at here we have to calculate. What is the value here? And also they are asking calculate us to value at here. Are you clear? Both asking. So how do you write it? You need both formula. Both formula. Present value interest factor, annuity table, and present future value interest factor, annuity table. So if I am writing it manually, this is the way of writing it manually. Future value, okay, equal, if I am calculating this one, my red question, මෙතන තියෙන mark එක calculate කරනවා නම් future value is, shall I put here the, shall I put first one here? If you are calculating the present value equal, you are writing this formula, annuity multiplied by, right, present value interest factor annuity for 1%, okay, for 24 months. That is the answer here. 24 months. If you are calculating here, how do you write? Future value, okay, annuity, okay, multiplied by, but future value interest factor annuity, again same, 1%, there is no difference, writing way, 24 months, same thing, 1%, 24 months, you see, here also same thing, 1%, 24 months, but the difference is the formula, present value interest factor annuity, here present value interest factor annuity, and here you see present future value interest factor annuity. I think last week we discussed the table number 3 here. This is the table number 3 and this is the table number 4. Is it clear? Yes. Can you try to find out the answer by using your table? I'll give you, 5 minutes or 2-3 minutes. Just think about, just look at the table and the formula. Shall I write the formula? I'm not remember. I can't remember those formulas. But I will write you the formula. Formula is, I'm just writing the formula, not the annuity. Formula is this way, but I may have given in a different way. Minus n කියලා මම දුන්නේ last week, but you can refer to this table or this formula also. There is no problem. Okay, within bracket 1 plus I, 1 plus I. Okay, bracket power n, okay, minus 1. That is 1. The total formula, right? The total formula, the total set divided by I. That is the factor. That's the formula. Okay. If I am entering the data to the formula, 1 plus I is very clear. How much? 1 plus I? 1, 0, 1. Because 1%, no? That answer is very clear. Power n means 24 months. Power n means 24 months. Minus 1. Okay. Since it's a bracket common one minus figure, we have to first solve this part. Bracket එක දාන්න එකයි. ඒ කොටස ඉවර කරගන්න ඕන. ඊට පස්සේ මුළු ඔක්කොම උත්තරේ බෙදන්න ඕන I වලින් 01 වලින්. 0.01. Is it clear? එතකොට එනවා ෆැක්ටර් එක. එතන 26.973. Right? So your money annuity is 20,000. You multiplied it by this. This කියන්නේ මොකද්ද? Present value interest factor annuity for 1%, 24 month. So your future value would be so much. 539. එතන මෙතෙන්ට උත්තරය තමයි 539යි 469. At the end of the 2 years or the 24 month, your fund would be, the accounts balance would be so much. That is the answer. I think last we wrote this formula for future value. Okay. What you can do? Shall we just focus on this formula for table development? If you are unable to do it, a table development. Neither. Table එකට develop කරගන්න මේක නේද formula එක දාන්න ඕන අපි. Third table එක කොහොමද අපි ගත්තේ? මම කිව්වේ 1 2 ගන්න කියලා නේ. 0 ගත්තොත් කමක් නැහැ. 0 ගත්තොත් වඩා හොඳයි. 0 එහෙම ප්‍රශ්නයක් නෑ ඕනේ ගන්න. එතකොට මේක අපි හදනවා දැන් table එකේ අපට ඕන 124 දක්වානේ. sorry 24 දක්වා හදා ගන්නවා මම මේ කාර්යය සඳහා. Okay, I'm just telling you how to make the table, but if you can apply data to this formula, no need of looking at the formula, you get the answer. But I'm just helping you how to get the answer by using your table. You may have a table. ඒක තමයි මම කියන්නේ. දැන් ගිය සතියේ තේරුම් නැත්නම් table එක හදන ආකාරය මේකෙන් තමයි ඒක තවදුරටත් පැහැදිලි කරන්නේ. එතන අපි කරන්නේ මෙතන 100ට 1ට අපි හදන්නේ. Likewise, you may have 2% also. නේද? මතකනේ මං කිව්වා මේ විදිහට අපිට ඇඳගෙන තියාගන්න පුළුවන්. Excel එක පොඩ්ඩක් expert නම් මං හිතන්නේ මේවා නැති. right. එතකොට අපේ formula එක අපි enter කරනවා. මොකද formula එක? right. bracket 1.01 එක clear? bracket power නේද? මෙතෙන්ට power එක අපි මේක දෙනවා 0 එක. ඊළඟට -1 මේ මුළු සෙට් එකම බෙදන්න ඕනලු එකෙන්. ඒක නිසා තව බ්‍රැකට් එකක් දා ගන්නවා නේද? ඒ මුළු සෙට් එකම බෙදන්න ඕන නිසා තව බ්‍රැකට් එකක් දා ගන්නවා. ඒක බෙදනවා කීයෙන්ද? i වලින්. i කියන්නේ කීයද? 0.01. එතකොට එනවා මෙතන ෆැක්ටර් එක. මෙතන ෆැක්ටර් එක 0යි. ඊට පස්සේ මේ ටික ඇද ගන්න. ඔක තමයි අපේ කතාව. මේක තියෙනවා. මේක තමයි ටේබල් එක. ඒතර මේකට second year, third year, sorry, second percent, 2%, 3%, 4%, 5%, 6%. Likewise, I have told you to develop a table and take those things into a A4 sheet. That is table number 3. We label this as, I think you can remember, present value interest factor annuity table, and you can write the formula also this way. Just check this answer with the other Excel sheet what we had, 26.973. We did a calculation. Can you remember? We got the same answer, 26.93973. You can get the answer by applying this method or by looking at the table, whatever. There's no problem. But you have to remember which table to refer. Which table to refer. Is it clear? Okay. Then shall we go to the other answer? Now this is, remember, we are calculating the future value, assuming that cash flows are, cash flows are end of the period. 20,000 right? Cash flows are end of the period. Clear? So how do you calculate this one? Right. If you do it, this is the calculation formula. How do you do it? Shall I enter the formula first? I'll tell you the formula with you. I think this formula is a little bit different. Same formula, but I'm writing in a different way of presentation. Last time I introduced minus n story, but just look at this. 1 minus, okay, 1 divided by 1 plus r I, right? Okay. Since it's a complex formula, what we have to do is we have to put bracket where relevant. මේ දෙකට bracket එක දාගන්න. අපි දන්න මෙතන පොඩි කතාවක් තියෙනවා කියලා. 1 plus i කියන්නේ ඒක ඉස්සෙල්ලා සුළු වෙන්න ඕනේ. එතන දානවා. මේකේ power දාගන්නවා. power n. ඒතර ඔබට පේනවා ඇති minus figure එකක් තියෙනවා. ඒතර minus figure එකක් තියෙනකොට අපි දැනගන්න ඕන ඒක sort out වෙන්නේ කොහොමද කියලා. අපි තියෙනවා ඉස්සෙල්ලා මෙන්න මේකයි මේ ටික සුළු වෙන්න ඕන. නිසා තව බ්‍රැකට් එකක් දාන්න. Is it clear? And divide it by I. That is the formula. Can you remember the formula? 1 minus 1 divide by 1 plus I power n. The total formula කියන්නේ මේ සෙට් එකම අපි I වලින් බෙදනවා. Shall we enter the data? Oh my God, what happened? Yes. So what I will do is I will enter the data to the formula here with this I enter the data to the formula. Can you write it down first, please? The formula if you want. If you want, you can write the formula. I'll write it again. Okay. 1 minus 1 plus I bracket for the formula. You got a bracket right? Make it a power n enawa. Power n enawa. Okay. Oh my god. Why? What happened? Power n enawa. Arne tiga. Make a tapi bracket. Metenta bracket. That's all. Okay. Will you copy it and apply the data? If you have the calculator or Excel sheet, just see. You can copy it. Right. What I will do is, without taking much time, I will prepare the table for that also, and we'll calculate the rate. Copy. Rate. Make them put use karno. Second formula. This is present value. Make it a enter karno. Metana. Okay. 1 minus 1 1 minus will you help me? 0 1, right? Power okay, this and the total divide by yes, the answer. So this is the answer, but ignore the minus figures because here the figure is always more than 1. You have to ignore the minus figures, or you put the other way around. You have to ignore the minus figures. Okay.
Excuse me, sir. If you put the n as a minus figure, then you will get a positive answer.
What?
The n figure as minus.
No,
One
you can't.
minus.
As per the formula, present value. I think I wrote it.
N should be minus n, right?
No. I wrote it in a different manner. Mistake කවදාද කියලා තියෙන්නේ? මේකයි දෙකම එකයි වගේ නේද? දැන් මෙතන වෙන්න ඕන මිස් තා පොඩි වෙනසක් වෙන්න ඕන. I'm sorry. No, I didn't notice it. I'll tell you. මෙතන එන්න ඕන 1 divide. දැන් හරි. එතකොට එන්නේ එකට වඩා අඩුවක්. I made a mistake. So this is the formula. Can you make it very clearly? 1 minus 1 divide 1 plus I power n divide by I. අපි එතකොට බලමු. ඒක හරියන්න ඕන එතකොට වෙන්න ඕන. You can't put 1 n minus you can't do it. මං හිතන්නේ එතන ඒක අමාරුයි දාන්නේ ඒ ක්‍රමයට. Okay, now I think answer is correct. එතකොට මෙතෙන්ට එන්න ඕන මොකද්ද? මෙන්න මෙතෙන්ට මං හිතන්නේ ඔයගොල්ලන්ට පේනවායි කියලානේ මං කරන්නේ. Right. And then yes na. Hariනේ. Figures වෙනස් වුණා. Yes, that is the answer. I think yes, it's correct. I hope this is correct. Just see, compare your answer with this 1% category. Okay. Now again, I just want to highlight the difference between these two formulas. Of course, the future value interest factor annuity is 1 plus I power n minus I minus 1 divide by I. Division is common to the balance part of the formula. So thereby, that's why we put a bracket again here. This is future value interest factor annuity table, but we come to the present value interest factor annuity table, 1 minus 1 divided by 1 plus I. So you have to understand that very clearly. එක යට එක ධන I තියන්න ඕන. ඒකේ තමයි බලය 1. බලය n divide by I. I think last week I just put minus 1 කරලා වෙන විදියකට මම හිතන්නේ formula එක ලිව්වා, but that is also correct. Different ways you can present the formula. Anyway, if you want to calculate the present value of this, what you have to do is you just multiply it by 200,000, 20,000 by the factor. ඉතින් අපිට factor එක හොයාගන්න වෙනවා table එකට ගිහිල්ලා. So 1%, 24 month, 21,243. නේද? 21,243. ඉතින් අපි ඒකෙන් අපි මේක මේව කරලා දාන්න. multiply කරනවා. මේක ගේන්න පුළුවන් නෙමෙයි. Two, 4, 3 something. No? හරිද? එතන 424යි 860ක් වෙනවා. If you are depositing this much of series of money, what is the worth of today? මේ ඔක්කොගෙම අද වටිනාකම වෙන්නේ 4,24,860. That's the answer. Okay? Right. Is it clear? Right. Now, what if now we calculate these two figures assuming the cash flows are big end of the period. Now, what if cash flows are beginning? If the cash flows are beginning, what happened really? If the cash flows are beginning, what happened?
Can you reduce?
If the cash flows are beginning, what happened here is you get another 20,000. I'm sorry, I have put the 20,000 there. 20,000, but here there is no 20,000. Can you see the difference? If I am again doing for you to understand this, earlier our cash flow was this. This is the end cash flow pattern. for 24 months. That's what we did our calculation. Now, if the cash flows are beginning, you are getting a deposit just now, not the first year end. But the last deposits you get not the 24th year end, you get the 24th month, beginning. 24th month beginning means 23rd year, 23rd month end. Right? So cash flows would be like this. So what would be our logic? If that is the case, can you tell me? If that is the case, what we did was same formula. Can you remember? Multiplied by 1 plus 1 plus I wali multiply kara. Can you remember? There's no big thing. That was the formula. And I make it මොකද කරන්න ඕන? මේකෙත් අපි මොකද කරන්න ඕන? ඒකෙත් අපි කරන්න ඕන. එහෙම නේද? මේක multiply කරන්න ඕන. මොකද කරන්න ඕන? 1 එමනේ 1 plus I වලින්. එහෙනම් සරල භාෂාවෙන් මොකද කරන්න ඕන? මේ උත්තරය අපි ගන්න රේට් එක අර අපේ ටේබල් එකකින් ගන්න රේට් එක 424යි හරිනේ 860 මම හිතනවා තේරෙනවා කියලා මල්ටිප්ලයි කරනවා 1.0යි ඒකේ එතන මම හිතනවා හරි කියලා you got it ඒක තමයි ආන්සර් එක. ඒතර ආන්සර් එක අපිට ඕන නම් කීයද කියලා ලියන්න පුළුවන් නේද? ආන්සර් එක අපිට කීයද කියලා ලියන්න පුළුවන්. බලමු ආන්සර් කීයද කියලා. 424යි. හරිනේ මම මේ කෙටි ක්‍රම පාවිච්චි කරන දීර්ඝ ක්‍රම පාවිච්චි කරන ඕගොල්ලන්ට ෆිගර් එක දැක්කම එකපාරට ගත්තාම අඳුම් කුඳුම් වෙන නිසා 1.0යි එකෙන් වැඩි කරලා පෙන්නනවා. හරිනේ? එතකොට දැන් ආන්සර් එක එනවා 429 209. Now you see here the answer is 424 860. Here 429 209. Okay. Here the future value, present value is more than the present value here. එතකොට මෙතන මොකද කරන්නේ? මෙතනත් අර ලොජික් එකම තමයි. මොකද ලොජික් එක? මේ ෆෝමියුලා එක නේද? මොකද කරන්නේ? වැඩි කරනවා එක ධනයි වලින්. මේ වෙන මොකුත් කරන්නේ නැහැ. මෙතනින් වැඩි කරන එක ධනයි වලින්. හිතර මං කියන එක තේරෙනවා අයියා. එක ධනයි එක ධනයි වලින් වැඩි කරනවා. මෙතනත් එහෙමයි නේ මේ ෆෝමියුලා එක එක ධනයි වලින් වැඩි කරනවා. ඒ කියන්නේ අපි ඩිෆරන්ස් වේ නේ මේක ලියලා තියෙන්නේ. එතනත් ඒකම තමයි logic. So what we have to do here? ඉතින් මේ උත්තරේ ගන්න නම් අපි මොකද කරන්න ඕන? මෙතෙන්ට ආපු උත්තරේ ඒ කියන්නේ 539යි 469 469 right? You multiply it by 1.01. That's the answer. මෙතෙන්ට උත්තරේ එනවා එතන 1 මෙතන මම මෙහෙම ලියනවා તો ලේසි මට multiply කරලා 1.01 වලින් 5,44,864ක් එනවා. That's the answer. Is it clear? But I didn't ask you to develop this annuity due table. I asked only to develop annuity general table. That's how you got the 4 tables. Is it clear? Right? So if you want, what we'll do is we will just have before the break we will have this calculation also. No, we will have a break, 15 minutes break. We will meet 4:30. We will meet 4:30. What to do? Okay, we will have a small break and 1:30 we will meet. I'm going to start. Now there is another question, sir. Could you please explain why we multiplied the present value by 1 plus r or the I? Is it to find first year and cash flow? So we are multiplying because of compounding. We discussed last week this story. If you want to get future value, there is a particular formula, a logical formula we develop. If you want to calculate the present value, there is a logical formula. But whatever the way if you take the factor from the table, we just multiply it. So that's the logic. Present value by 1 plus r. I think I had the. But remember, if you deposit, I explained that also in a different way. When you say compound, you calculate interest for capital and interest for interest. Interest we label as interim cash flows. We said that under compounding, interest also reinvested. I don't know whether you can understand now, but that's how we discuss. But just to highlight, now here you see that what we do is to calculate the future value of 2 years end. We multiplied. I'm talking about the second question. 20,000 deposits after 2 years. What would be the future value? So this we multiplied by, of course, 1 plus r. That is true. For example, we are writing this way: 20,000 1 plus. In this case, I think interest rate is 1%. But make it කරන්නේ 24 බලය දානවා මේකට. So your question is why we are multiplied by 1 plus r. 1 plus r means we want to calculate the, of course, year end balance or the second year end balance. Then බලන්න මෙහෙම වුණා නම් 1 plus r නැතුව මෙන්න මෙහෙම කරොත් මොකද වෙන්නේ උත්තරේ? 1 plus r කියන එක නැති කරලා මෙහෙම කරලා බලන්න. Just එතකොට interest එකකින් විතරක් වැඩි කරනවා. එතකොට බලන්න උත්තරේ මොකද්ද කියන්නේ? මම හිතන්නේ එතකොට මොකද වෙන්නේ? නෑ එතකොට අපිට ලොජික් එක ගේන්න බැරි වෙනවා. මම හිතන්නේ පුළුවන් කියලා. නෑ. එතකොට ඉන්නේ නෑ. 1 plus r වලින් වැඩි කරන හේතුව තමයි මොකද අපිට future value එක කියන්න ඕන 20000ත් එක්ක 20000 එක්ක. දැන් මෙතන තියෙන දැන් උදාහරණයක් වශයෙන් at the end of the second year the answer is 25,394 no. The meaning එක තමයි අපි මීට අවුරුදු දෙකකට කලින් දැම්ම රුපියල් 20000 අද 25394ක් වෙලා. ඒතර 5394 තමයි full year. නේද? The one is always equal to the capital. That's why we use 1 plus r or 1 plus I. I think that, of course, then shall we go to the another example, the answer. What I want you to discuss with you is the application of Excel. As I told you, you can go to the formula. Remember, This is the Excel calculation formula, financial calculator. If you want to calculate future value, of course you go to the future value. If you want to calculate present value, you go to the present value. Present value, official present value calculate. Present value. Make a present value. I mean here, present value. When you click this present value, you will get a box. In the box, you enter the rate. I think in this case, rate is 1%. අපි ඔය විදිහට enter කරන්න ඕන 1% enter කරන්න ඕනේ. ඒතර මෙතන පේනවා decimal වලින් ඉලක්කම් 0.01. NP means number of period. Number of period is 24 months because for 2 years 24 the 22 the year. Here, what was the answer? 24, eh? We had 2 answers. Yes. මම හිතන්නේ අපේ ඉලක්කම් ටික මතකනේ 24 we just entered 24 just exam. Give me 1 second. Okay, we just 24 and yes, speed. I just want to enter 24. Okay, just go to the formula, financial calculator. If you want the present value, you go to the present value, select the present value. So you will get a box. You enter the data. 1%. Okay. Then period is 24. We are applying this data to annuity, not the lump sum, the complex formula. PMT is how much you are depositing. PMT means the payment. How much you are depositing each month. And you can remember each month you are depositing 20,000. If there is any future value, you can of course put, otherwise you make it 0. Future value means at the end of the particular period, there may be another lump sum. If it is not there, you just leave it. Then the type. So what I want to communicate to you is that type is, there are 2 types of annuities. Can you remember? Annuity due, annuity general. The formula which has been really embedded, inbuilt in the Excel sheet is annuity general, not the annuity due. So thereby, if you enter this data, 1%, 24 month, 20,000, you get the present value, which is equal to 420,000. Just see our example, our calculation. 4,24,864ක් ආවනේ අපිට මෙතන. ඒක තමයි මේ ඇවිල්ලා තියෙන්නේ අපිට නේ. 4,24,864. If you want, I will do it again for you. This is the method, right? මම මෙතෙන්ට answer එක කියනවා. How do you do it? How do you do it? Go to the formula, select the financial. මේ තමයි කෙටිම ක්‍රමය. ඒ කියන්නේ step by step මේ යන්නේ. තව shortcut තියෙනවා. Present value, enter the rate 1%, enter the period 24 month, enter the annuity, that is lump sum, annuity for the period. So answer is, you see, so much, so you get an answer here, 424,867. Is it clear? That is the present value. But remember this bracket store, you remove it. There is a logic. I will explain those matters later on, not now. Okay. Now, assuming that now we get the same answer, but little bit different. 87 method 80 80 but okay. So again, formula, financial calculator, you go to the present value, enter the data, 1%, agree, 24 month. This is where you can use the Excel sheet. At the examination, you can't use this method. Nah? PMT is 20,000, that is payment. And if you now we assume the cash flows are annuity general. Now, if the cash flows are really, you know, due, you put here 1. You put here 1. If you put 1, you get the present value. The present value is so much. 429,000. 429,116 here. 201. So there may be little different, but that's how you get the answer. Is it clear? Make me ave api Excel sheet එක. ඒ විදිහටම මේකේ ගන්න පුළුවන් මේ answer එක. Here the answer is this. How do you go? You go to the formula, financial calculator. Then you select the future value. Instead of present value, you are going to calculate the future value. So you get the same table. Same table. Here you entered the rate 1%. You have to enter in a percentage manner, but you will get here in the decimal form. 24, payment is 20,000. If you put any, if you don't put anything in the type case, the formula will take it as annuity general. So answer is, I think our answer is much more similar. 539,469. If you assume it, I'm doing it another way, other answer. Yes. If you do it in a different manner means if you consider cash flows and annuity due, same rate you apply. 24 months, there is no different, and here 20,000 your installment, but here you enter the type as 1 because you consider it as annuity due now. You change the formula which has been embedded in the Excel sheet. So now the answer is, I think, same answer we are getting, 544,864. Here also same, you know, almost same. Is it clear? Likewise, you can use the Excel sheet to calculate the future value and present value for annuity due and annuity general. Annuity due and annuity general. Right. Shall we just go to our what do you call this? Our got the quite big away. What is here? Our question. This one, I hope you all can see the question. We did this one, and now assume that you borrow 250,000 at a 12,000 today and agree to pay equal annual installment each year. End of 3 years from now, prepare loan amortization. Now you have to You have to do a loan amortization schedule. You are borrowing 250,000. 12% today and agree to pay annual, equal annual installment. Each year end. Here, each year end. So thereby we are talking about annuity general. Normally when you take a loan, money borrowed at the end of the period. Okay, 3 years from now. Again, we'll go back to our Excel sheet. Data 1250, 12%, 3 years. Right. Okay. I will open a new sheet and I will make it large for you. So, it's something like that. Just see whether you can understand. Year zero means now the customer is coming to the bank. Year 1, year 2, year 3. Customer is coming and asking, Miss, can I take a 250 loan? 250,000 loan. I'm ready to make equal installment. What do you by equal installment? Say X. Equal installment means X amount you are going to pay. When? At the end of the each year. And you are telling the customer interest rate is 12% per annum. Interest rate is 12% per annum. I know that by using your system software package, you can calculate the installment by entering the data. You know how to enter the data. So how do you calculate it is this. Now you will see here the what do you call X is the annuity, equal amount. No? So therefore, can you remember when annuity is given, how do you calculate the present value? Can you remember present value, right? E to A. Can you help me? Multiplied by what? Present value, interest factor, annuity, method. For 12%. Why 12%? Because we are talking about 12% per annum and 3 years. This is the way of writing. So what we have to do? So we have to calculate the X means the annuity A. We don't know the A. How do you take A? So A is equal method. Present value, that is the amount borrowing, divide by method. PBIF 12% for 3 years. So present value in your term, from the banking point of view, the present value is amount you borrow. Maybe amount you finance. Loan installment, right? Equal always amount finance. Amount finance කියලා කියන්නේ ණයක් හැටියට හරි මොකක් හරි දීපු ගාණ. Amount finance divide by, right? මේක හරි වැදගත්. මොකද present value, interest factor, annuity. Our example එකේ නම් 12% නේද? 12% for 3 years. Okay. ඉතින් rate එක දන්නේ නැතුව කරන්න බෑ. මේ fact එක හොයාගන්න ඕනේ. formula එකට enter කරනවා නම් අර මම කලින් කිව්ව formula එක enter කරන්න ඕනේ. නේද? කලින් කිව්ව formula එක මම හිතන්නේ ඇති. මේ තියෙන්නේ. මෙන්න මේ formula එක. මේ තියෙන present value formula එකනේ. ඒතර මේ formula එකට enter කරන්න පුළුවන් data. මම හිතනවා මම කියන එක තේරෙනවා කියලා. amount finance එක ගානේදී 250 හරිද? 250 amount finance මේ ගානේදී නේද? ඒක බෙදනවා මොකෙන්ද? මෙන්න මේ rate එක. මෙන්න මේ formula එක. අපි බලමු රේට් එක එන්ටර් කරලා උත්තරේ එනවද කියලා. මේක එන්ටර් කරමු 2,50,000 නේද? හරි? බෙදනවා 1 minus නේ 1 bracket 1 plus I කියලා කියන්නේ මෙතන 112නේ 1 plus එතකොට 1.2 you know for how many years? For 3 years. For 3 years. හරිද? මුළු ෆෝමියුලා එකම බෙදන්න ඕන I වලින්. ඒතකොට මෙතෙන්ට බ්‍රැකට් එකකුත් දානවා. ෆෝමියුලා එක පටන් ගත්තේ මෙතනින්. එතෙන්ට බ්‍රැකට් එකකුත් දානවා. හරිනේ? ඒක බෙදනවා අපි දශම 1.2. So you get the answer. මෙතන වැඩි කිරීමක් වෙන්න බෑ මෙතන එන්න ඕනේ බෙදීමනේ formula එකේ is it now answer is 2,50,000 1 minus 1 බෙදීම 1 yes කොහරි වරදක් වුණානේ problem right I got it here since it's a bracket මේ මුළු ඔක්කොගෙම නේ බෙදන්න ඕනේ මෙතනත් එකක් තියෙනවානේ මම හිතන්නේ දැන් හරි ඒතර වෙනවා 1,04,087ක් වෙනවා ආරිකේ you have to be careful when applying data to Excel sheet because you know the logic, if logic is not there, they will take the data in a different manner. 1,04,87 loan installment. Right? So what I can do is, we have the schedule for 1%. Shall I make it for 12%? The same table? Make it 12%. Kalau mereka kena sekarang pin, itu naik ke dana IWM 12% apply කරනවා නේද? බෙදන එකත් 12% කරා rate එක. तो एक कॉपी कराना right you get the rate okay මේ තියෙන 12% වලට percentile interest factor table එක මෙන්න මේ table එක මේක ඔයගොල්ලෝ හදලා තියෙනවා නම් you will get the second year third year factor is this උදාහරණයක් හදා ගන්න ඕන just look at this third year factor එක අපි මේක 2,50,000 අපි දෙන loan එක නේද ඒක බෙදුවොත් මේ factor එකෙන් අපට ආපු උත්තරේ කලින් ආපු උත්තරේ එන්න ඕන 104,487 ඒ උත්තරේම 104,487 කියලා කියන්නේ අපට මෙතන ආපු උත්තරේ තමයි is it clear so that is based on your table so if you have a table you can find out the figure 12% 3 year okay right so I told you the formula method and the table method so at the examination you will be given a table you have to select the appropriate table this is present value interest factor table you have to select now if you go to the formula method so I'll calculate in other way Excel sheet you go to the formula Excel what do you want to calculate you want to calculate the installment here the installment means PMT just look at here PMT you are now going to calculate the payment they are asking us question what the rate is 12% rate is 12% how then NPR the period is 3 Present value, how much you are giving as a loan? 250,000. So here the answer is, I think you agree with me, we got the answer. 104,087. It was the earlier answer. Similar to answer. Is it clear? Okay. So then we are going to prepare the loan amortization schedule, but in a different manner. Our presentation, I highlighted the loan amortization schedule, but I will just give you another format for loan amortization schedule. This is the period, 3 years. If you have so many years, whatever the number of years, you can take it. But here in this question, only 3 years. Whatever the account, there is the opening balance. You are very clear. Then for the opening balance, we calculate the interest, right? And we are making a payment, PMT, that is the PMT. And also we can calculate the capital column, I would say cap, and you will get the closing balance, CB. Are you clear? This is little different what we discussed in the slide presentation, but same logic we are discussing in a different form. Opening balance, interest for the period, PMT means payment, cap means capital, that is the capital portion of the loan installment, and the closing balance. Here, of course, you are giving 250,000. You have already given. So the accounts balance would say that, okay, your accounts balance as at here, first year opening, here first year closing, here second year opening, second year closing, third year opening, and third year closing. That's why I put opening and closing. So you might say, okay, your balance is 250,000. So how much you are charging as interest per year? Minimum amount you are charging interest, how much? 12%. Agree? You are charging 12% interest. You have to multiply it, sorry. Multiply by 12% interest. Okay, that is 30,000. But the payment? Payment we have calculated already in our answer, 104. මේක decimal ගානක් තියෙනවා අපි decimal මත කරලා 104ක් ගෙවනවා. What is the capital component? Capital component, you know, you are familiar with payment. What is the payment minus interest? Payment and interest are the capital component. How do you get the closing balance? Closing balance is basically the capital what you had at the beginning minus the capital you settled. So this is the closing balance. First year end, your loan balance would be so much. And you know, closing balance of the first year would be the second year opening balance. Right? So likewise, you can copy this, and also you can copy this, and same thing. I'm just copying the formula. Yes. Okay. This way. Basically, this has to be nil, but in my calculation, I will get a Satasu 0.82, but it's because of decimal. Is it clear? Opening balance, you calculate the interest. Always you are applying the interest rate to the opening balance. That is 12%, 12%, 12%. 12% I think better to write this down, otherwise. Can you copy this so you can take a screenshot or whatever? That is a loan amortization schedule. Can you understand? It's very simple if you have Excel sheet, but manually you have to do it, you know, one by one item calculation. But I didn't do it. I told you the logic. You start with 250. And interest is calculated based on opening balance, that is 12%. मैं हमें करना 12% डाला थी opening balance. मैं payment 12% थे ना मेरा. Payment is common and capital. मैं ठीक add कर रहा हूँ मैं अत्तर में 250,000 end of it. Can remember our earlier slide presentation also. It should almost closer to 250. Yeah. මෙතන රුපියලක වෙනසක් තියෙනවා මෙතන මේ ප්‍රශ්න නිසා. Okay, so that is about loan amortization schedule. That is about loan amortization schedule. Right. If you copied it down or if you took a screenshot, shall we go to the next question? Without taking much time. Yes. Next question is, of course, how long will it take double 200 that you did today under the interest rate of 12% compounded annually? What you have to do? You divide 12%. 72 by 12%. No? 72 rule apply when? එතකොට උත්තරේ මොකද්ද? අපි කලින් මේක හැදුවා. 72 නේද? බෙදනවා 112යි. අවුරුදු 6ක් ආසන්න වශයෙන්. නේද? 72 බෙදනවා 12යි. ඉන්ටරෙස්ට් රේට් එක 100ක් වුණා නම් you divide by 72 by 6%. So I think that is about the answer. How long, okay, if it is expected to receive 12,000 each month for an indefinite period, interest rate per annum is 12%, calculate the present value. Okay. I didn't cover up this part in your slide presentation. I didn't cover up this part in your slide presentation. So this is basically, I would say, are you clear about what I'm talking? I'm talking about this part now. Okay, this part means it is expected to receive 12,000 each month end of for an indefinite period. Interest rate is 12% per annum. Calculate the present value. Right, we will do it. So I will use Excel sheet. It's not a big thing, very simple. It's a very simple story. Now we studied a single one. We studied single cash flow. Okay. We studied an annuity. Agree? But of course, annuity, you know, we have two parts. One is annuity, you know, due, and other one is annuity, of course, general. Is it clear? And also we discuss mixed cash flow. Mixed cash flow. Yeah, you know, cash flows are unequal. Then for both we calculate present value and future value. Agree? We calculate present value and future value. For annuity due, also we calculate present value and future value. Of course, for this also we calculate present value and this, of course, we calculate only present value. We didn't calculate the future value. But remember, when you are making a decision, even though you calculate the future value, for given cash flows, we are making the decision today. So thereby most of the cases, we calculate present value since we are taking the decision today. Right? Now what I want to, we have already discussed this. And I have discussed the formulas also for each one, 6 formulas, but here we consider this as we discount this as case by case. Now what I am going to do is I am going to start introducing perpetuity. PUR, perpetuity. Yes, perpetuity. 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 What is perpetuity? Really? Perpetuity means you received cash flows. Perpetuity means cash flows for indefinite. receive it. If you are receiving cash flows for indefinite period, it's called perpetuity. But remember, amount is fixed. That is called perpetuity. Is it clear? Cash flows for indefinite period and amount is fixed. What is our example? In our example, you are receiving 12,000 each month. Each month end. So thereby this perpetuity is really general. Each month end for an indefinite period. හැමදාම හැම මාසෙම අග මාස 12 මාසයකට රුපියල් 10000 ගානේ for an indefinite period. What is the present value? Very simply, present value is perpetuity. If you want to calculate the present value of perpetuity, okay, present value of perpetuity is equal. P means perpetuity. P means perpetuity divided by I. That's all. Very simple. How do you calculate it? P divided by I. What is the answer in our case? 12%. Yes. In our answer, what is the in our question? What is the answer? Perpetuity is 12,000. What is my perpetuity? Fixed amount for a indefinite period divided by 12%. That is the present value. Is it clear? Can you copy it down if you want? P divided by I. That is 100,000. If you have 12,000 හම්බෙනවා නම් හැම මාසෙම අනාගතේ නොපෙනෙන කාලයක් සඳහා ඒකේ අද වටින ලක්ෂය. අපෙන් කවුරු හරි ඇහුවොත් shall I give you 100,000 today or 12,000 each month end for an indefinite period? What is your answer? Answer is indifferent. අද ලක්ෂය හම්බුනත් එකයි 12,000 ගානේ ගත්තත් එකයි. කොහොමද අපිට shall I give you 120,000 or 12,000 indefinitely? What is the answer? You get the 120,000 today if the interest rate is 12% per annum, because it's better than having the perpetuity cash flow. Right. Now that is the answer. If perpetuity is each month beginning, what would be the answer? Now this is end. If it is each month beginning, what you have to do is present value of perpetuity is equal, very simply, P divided by I. That is true. That is for cash flows month end or the year end. What you have to do is you just multiply this by 1 plus 1 plus 1 plus. You remember the formula? 1 plus I. 1 plus I. It's very simple. So I discussed with you perpetuity, I would say general, perpetuity due. Okay. Right. So with that, practice question is, I think it's over. We have discussed, different version of questions. Now, of course, this is time value of money. Another question. So there are 12 questions. What you have to do is you have to do it yourself as an assignment. Now, second assignment is this. So I am giving you 2 weeks. So you have to submit these 2 assignments. One is 4 table. And other one is time value of money. So the time would be, you have to give it to me, July, today, okay, today is the 25th, I think, yes, August 8th would be my deadline for you. Okay, එතකොට ඒක සබ්මිට් කරන්න එකම විදියට මේ there are 5 assignments. Excel sheet 1, Excel sheet 2, Excel sheet 3, Excel sheet 4 plus the answer for this tutorials would be one assignment for you. There are 12 questions, but I know of course there are difficult questions, but see how you can really answer for this. But remember here rates I have given 5.5 also, not a fixed rate, so you have to have your knowledge. And I like your calculation based on your own, not the Excel formula, so thereby you should have the working also in your assignment, not just straightforward answer, but you can check the answer with the Excel formula which I showed you. Anyhow, you should understand this tutorial. So there are a lot of issues in this tutorial, whether the cash flows are annuity due, whatever, there are issues, interest rate, and you have to practice this, then you will be familiar with this, but you will get many puzzles. But purposefully I have designed in such a way for you to learn and discuss. Okay, I know that we were unable to do one more mixed example. What I will do is example but I did it in the tutorial, the slide presentation, but I just give you one example for that also. Right, I will do like this very simply. Suppose you have cash flows given for a project 1, 2, 3, 4, 5, right? The cash flows beginning, maybe you are investing, say just 30 million. Cash flows minus means your outflow. Zero here, you are buying a particular, software package, maybe particular machine, maybe particular technology, maybe particular innovation you are buying. And once you purchase it, you generate cash flow. Suppose first year 12 million you are generating, second year again 5 million, next year again 12 million, 3 million, right? Again this year, of course, another, say 25 million. That's the cash flow. Okay, we'll forget about this a little bit advanced. Okay, these are the cash flows you are receiving. How assume that interest rate is 12% per annum. How do you calculate? Very simply, this is a type of mixed cash flow, right? 12% in the first year, second year 5, third year 12, fourth year 3 million, fifth year. So these are unequal cash flow. We label it as unequal cash flow. We label it as unequal cash. How do you calculate the present value of unequal cash flow? If the cash flows are unequal, what you have to do is you have to do case by case. Here, case by case means if you want to calculate the present value as at today, we are asking the value as at today. Value as at today is this keyboard. Yes, this. So අපි කරන්නේ අර ෆෝමියුලා එක දානවා. present value formula එක lump sum එකක්. මේ කේස් එක වෙනම ගන්නකොට ඒක lump sum එකක්. single payment. මේකත් වෙනම single payment. මේකත් වෙනම single payment එකක්. So thereby what we do is we do the second formula. What is the second formula? 1 divided by 1 plus I. Can you remember? 1 plus I. Yes. Our n. මම හිතන මේක මතක ඇති කියලා. අපේ second formula එක factor එක නේද? මතක නේද? power n. Can you remember the second formula? එහෙම එකක් අපි ලිව්වා. මොකද්ද? present value interest factor කියලා table එකක් ඇදුවා. right. අපි දානවා formula. අපි හිතන 12% කියලා. 12% වෙනකොට මෙහෙමයි එන්නේ. කොහමද? එක බෙදීම නේද? 1.12 නේද? පළවෙනි කාලේ නම් මෙතන තියෙන බිංදු නම් බිංදු බලය. ඒක එකයිනේ උත්තරේ. ඊට පස්සේ මෙහෙට දාම rates ටික එනවා. present value factors ටික එනවා. මේ තියෙන factors ටික. නේද? අද රුපියලක් තව අවුරුදු 5කින් වෙන්නේ නැත්නම් තව අවුරුදු 5කින් හම්බෙන රුපියලක් අද වෙන්නේ 756යි ඒ විදිහට. right? එතන අපි case by case එකේ present value ගන්නවා. case by case value present value ගන්න. මෙන්න මේ column එක මේ මිලියන 12 වැඩි කරනවා මෙන්න මේ factor එකේ. වෙනවා අපිට රුපියල් 10යි 71. right? මේ ටිකේ value එක අරගෙන තියෙන present value එක ඒකේ sum එක ගත්තාම when you take the total of these present value if අසන්න වශයෙන් මිලියන 39 right? So if I am asking a question, how much, suppose you are getting these kind of benefits by investing X amount. ඔබ X amount එකක් invest කරොත් තමයි මෙතන කීයක් හරි වියදම් කරොත් තමයි ඔබට මේ benefits එන්නේ. How much you are ready to invest? What is the value? How much you are ready to invest here? What is your answer?
39.3.
Exactly. You are ready to invest 39. If the machine is worth 39 million, so we are ready to buy. Exactly 39.33. If the machine is more than 39.33, we are not going to invest because it's not benefit. For example, now suppose you are investing here 40 million. Or 40 million, you are investing 60 million. Investing 60 million is minus 60, because you are investing. Now, make a because today's worth 60 million is 60 million. Other siyak, other rupiah had a million, what would be then the total net cash flow or the net figure? Net figure එක මොකක්ද වෙන්නේ කියලා? මිලියන 20ක් පාඩුයි. We call it NPV. NPV means net present value. If the net present value is negative, we are rejecting the machine. We are rejecting the project. But if it were really not 60, if it were really 25, just see what happened. 25 NPV is positive 64 million. Sorry, I'm sorry. Make a minus 20. Make a minus. NPV is 14 million. You see? NPV is 14 million, which is positive. Is it clear? එතකොට අපිට පේනවා ඇති මේකේ ඉන්වෙස්ට්මන්ට් එක අපිට මතකයි 39.33 වුණා නම් මොකද වෙන්නේ? මං හිතන්නේ almost NPV 0. We are indifferent whether to invest or not. Is it clear? So what I wanted to inform you how to calculate present value for unequal cash flows. That was my effort, but I teach you indirectly the meaning of NPV also. Is it clear? Right. So with that, I think the first session is over, time value of money. But I know, of course, you will learn a lot of things by doing this exercise. You may have group discussion, you may discuss with others, consult others, but don't just copy it down from others. I expect you to involve, do the calculation, discuss it. At least discuss what do you mean by present value, what do you mean by future value, what is the annuity, why we are discount, how we are discount, what is the applicable formula, what is the applicable way, what is the how do I do it in the Excel sheet, how do I check my accuracy of answers by using the Excel sheet. So likewise, you can do lot of things, but here the questions are not perfect. දාලා තියෙන්නේ හරියටම ටක්කෙට තේරෙන විදියට නෙමෙයි. මෙතන පොඩි issues එන්න පුළුවන්. But you have to sort out those issues and make certain assumptions. You have to do some assumption also based on your knowledge. Whatever assumptions you feel rational, you can do. Just think whether it is possible. If you have any question, problem, issues, we will discuss. Next week we will spend 10-20 minutes for this handout. Then you can submit it on the 8th of August. So with this, I think the lecture is today's session is over. So how are we supposed to submit the assignments? You will get it how to, I think it's of course maybe email, maybe I don't know their policy, I have to discuss. You will get the feedback. So can we scientific calculator for the exam? Yes, you can use scientific calculator, no problem. You can use scientific calculator. Yes, I explained this one. You can use the scientific calculator, no problem. I like even if you can use the laptop, but I don't think they will allow. Anyway, no problem. Thank you very much for participating. I know that you also have busy, some other works and anyway. See you next week. Any issue? Yes, you can ask the question. Someone is asking a question, I think. Is it? I think, who is that? I can't see. It sounds like you have said something, so your hand will be. Right, anyway. Anything you want to communicate me? Any question before winding up?
So can we do the assignment in Excel format?
Sorry?
Can we do the assignment in Excel format?
Excel format in the sense by using the Excel formula or in the Excel sheet?
Excel sheet.
Yeah, you type those things like what I did. Yes, no problem. Whatever, whether it is Word document or Excel document, I don't mind. Do we get a discounting factor tables at the exam? Yes, you will get. Some of us having job tests on 8th. So can you give us 1 week more? Okay, no problem. So then the 15th would be the date. I don't worry. I don't mind. Okay, no problem. 15th. Someone is asking, a group of people asking, can we, postpone the deadline? Yes, of course, you can. 15th is the date. We will send the assignment our email address. Assignments are, yeah, no, you will be informed by Mr. Kalinga. So can you give us one? Yes. Any question? So far, no? Right. Then shall we wind up for today? Thank you very much for being with me. And we will meet next week for the second session, which is most probably we'll talk about cost of capital, the advanced part of this time value of money. Okay. Yes. Thank you. Thank you so much.